Good morning, traders. It's Monday, October the 6th, 2025. Mark Treadway here with your global commodities overview. Let's dive straight in. Oil has kicked off the week with a pulse. Prices are up roughly 1% this morning as OPEC delivered a smaller than expected production hike of 137,000 barrels per day for November. This move is a direct response to recent market softness and reflects split sentiment within OPEC. Russia was keen on limited increases to protect prices, while Saudi Arabia wanted to go bigger to regain a share more aggressively. If you're trading in crude, keep a close eye on intraday volatility. Think about selling into strength if the rally fades, especially with ongoing supply headwinds from continued sanctions on Russia and new Ukrainian strikes on Russian energy infrastructure. Markets may stay choppy as soft demand risks colliding with these evolving supply shocks. Consider rolling short-term futures or deploying option straddles this week to capture expected two-way swings. On the precious metals side, gold burst through the $3,900 an ounce barrier for the first time ever. A safe haven surge triggered by the US government shutdown and the yen's collapse, both of which sent investors racing to shelter assets. Robust inflation, geopolitical tension, and central bank dovishness all amplify this momentum. If you're trading in gold, think of riding the wave with leveraged ETF exposures or staggered call options, but be disciplined on trailing stops. Profit booking will likely follow these historical highs, and paradise can turn quickly in this environment. In industrial metals, miners are seeking new tech to boost copper, nickel, and cobalt output ahead of an expected clean energy and AI-driven demand surge. If you're positioned in metals, consider overweighting producers with new extraction tech or those expanding into battery metals, and watch for event-driven price pops linked to fresh discoveries or M&A in the sector. While spot prices are generally steady, there's outsized event risk. In the agriculture markets, the focus this week is on US and South American weather models, which are flashing mixed signals for soybeans and corn. If you're engaged in grains, adjust hedges dynamically as weather headlines break and be nimble on basis contracts. The market is hypersensitive to even marginal crop news as global inventories remain tight. No major price spikes early today, but keep that news feed close. And finally, geopolitics is front and center for every market here. The G7's expanded Russian energy clampdown and the persistent US shutdown risk are destabilizing flows and sentiment, while softer economic data in Europe and a hawkish Fed are driving sharp currency moves. This macro backdrop rewards those who trade with vigilance. So tighten risk, use more conditional orders, and actively rebalance your exposures across geographies. I think this is all for this week's kickoff. Stay disciplined, trade with conviction, and above all, keep your risk tools sharp.